Hello, everybody. So HIMS is surging. HIMS is up 8% right now on an upgrade from Barclays on the GLP-1 fuel, as I'm going to call it. Of course, this is nothing new, but I want to start the first video of the day with the stock that I cover a lot of on channel, this stock, HIMS. There's really two top stocks on this channel that I cover a lot. It's strategy, MSTR, right, and HIMS. I cover these stocks almost equally, although recently, because MSTR has been underperforming so much, I've covered more MSTR, but I want to take a bit of a victory lap here. $35 on HIMS, that's a beautiful price. The stock is surging on literally nothing, but Wall Street finally noticing. So I'm gonna try to go and answer a few questions. So HIMS is climbing because the market is realizing that GLP-1s are going to be huge and that HIMS is the leading telehealth. It's the leading provider of GLP-1s. Most insurance companies don't reimburse for GLP-1s, so you have to go through one of these providers. HIMS has a amazing program. It offers all of the GLP-1s that you could want, from the older liraglutide GLP-1 to the oral Wegovy, traditional Wegovy, and it also offers, of course, tirzepatide being Lilly's greater weight loss tool, but tirzepatide being a little more expensive, of course. And it even has Fundayo, which is Lilly's pill, which is kind of a different pill. So HIMS is kind of like ground zero of prescription. But of course, what's great about HIMS is that when you go see HIMS, you have your follow-up, you have your prescription all in one. You get to see a doctor right away. You have a modern app with modern UI, UX. You have something very important, which I always talk about: transparent pricing. You know exactly what it's going to cost. And it's a subscription. So it's, of course, aligned with the way most people are familiar with doing business. You have a Netflix subscription. Why not have a HIMS subscription and fix whatever minor ailment you may have, right? And of course, this company got started with ED, moved into weight loss, and now it just does just about everything. Every mid-level ailment that you could think of, HIMS does it. HIMS even does more advanced stuff that require labs, like HRT, for example, hormone replacement therapy. They do that at HIMS, and this requires labs and all that sort of stuff. It's much more advanced. HIMS is the disruption of the doctor's office and the pharmacy all in one, marching towards becoming a big tech company. That's what HIMS has always been, in my view. And of course, most people don't get it. But the stock, of course, way more than doubled from February lows. And actually, from what I would argue, I'll show you the chart in a second. What would have been roughly March, late March 2026. That would have been the point that I would have considered this stock mostly de-risked. This stock was trading at $19 back then, and we had very few new information after that, except Lilly, and I'll get to that in a second. So the question is the stock cheap? It's still cheap. At a 0.13, it's still very, very, very cheap. This stock had no business ever getting under 20. It had absolutely no business becoming this inexpensive. It had no business seeing $15 again. Yet it did, because that's the crazy market, and we had insane factors from Middle East to interest rate fears not dropping, from basket association with HIMS. Very much a hated stock, extremely volatile. Now, is it still cheap at 35? Absolutely, it's still cheap at 35. But I think what's happening is a lot of people are noticing HIMS, because HIMS doubled in next to no time. It doubled in next to no time. And so because of that, now you have what I would call the chasers. And I see it on this YouTube channel. People often, when people come and ask me about a new stock, that stock has already doubled, right? The stock just doubled, and so they come and they ask me about the stock. Right? And this is not, of course, my style of investing. I like to buy a stock when it's 70% off, not when it just doubled, right? But HIMS just doubled compared to the February lows. It's still exactly 43% off. It's 43% off from a year ago. So this stock, in my view, is still inexpensive. It had no business going this low, but it did, and that's because of a crazy Mr. Market. Of course, the exciting vertical, the vertical that the market is excited about right now is GLP-1. GLP-1s are going to be a blockbuster medication. Note how HIMSS has had a lot of blockbuster medications, right? It sells the early ED drugs, which were blockbusters. It also has statin with its Art Health. That was also a blockbuster in its day. Hair loss, that was a blockbuster. So HIMSS is a seller of blockbuster drugs. And so GLP-1s are going to be the bigger verticals. And after that, we have peptides. And we know we have 2 waves of peptides coming, one over the summer, one early next year. 2 waves of peptides that are going to be approved by the new FDA. So that's going to be another enormous tailwind for HIMSS. Last year, HIMSS used to trade exclusively on GLP-1 hopes. Today, these are not hopes. Today, we actually have GLP-1s. And peak signal for HIMSS that this stock is working under the hood, not the stock price, but that the company is working under the hood. Peak signal for me was, of course, the Eli Lilly partnership. And HIMSS, in its announcement, didn't call it a partnership. And so the bears piled on and said, oh, it's not a partnership. It's more like a pharmacy transfer. But as far as I'm concerned, if I get it on the HIMSS app as a customer and I can get Lilly's tirzepatide on the HIMSS app, to me, to the customer, it sure looks like a partnership. And also keep in mind, they have the GLP-1 subscription plan, which is $150, which is pure margin for HIMSS too, by the way. This is pure margin for HIMSS. So to me, peak signal on this stock was actually April 23rd. The stock was $28 at April 23rd. So you're still looking at 22% up from April 23rd. You're still looking at a big gain, but I think reasonably enough signal existed in this stock reasonably in March of 2026, when the stock was trading at just under $20 in March of 2026. Now, in March of 2026, the market was worrying about something else. And so, because the market is not worrying anymore, it seems to me like it's looking for a new obvious opportunity, HIMSS being kind of that obvious opportunity, because who's going to be one of the biggest purveyors of GLP-1s? It's going to be online pharmacies, presumably. And which is the biggest of them all? Which is the biggest online pharmacy? It's HIMSS. And then if you start going into the quote-unquote online pharmacies that actually include the doctors and the doctor follow-ups and the network of doctors, then HIMSS, in my view, is the absolute winner, because they have everything. They have the network of doctors to do the prescription, they have the pharmacy to fulfill whatever you need, and then they sell all of the GLP-1. They have choice. You can pick among 5 or 6. And they cross-sell for other issues. If you're overweight, it's unfortunately likely that you could have other issues. So if you're overweight and you have another issue, HIMSS can also take care of that for you and address that. This is, HIMSS, in my view, is the death of a mom-and-pop doctor, at least for medium to low-level health issues, right? Doctors are still very helpful for big things, big stuff. You want to go see the doctor. But the bread and butter, big tech is going to take over that bread and butter. Big tech is going to take the bread and butter of a mom-and-pop doctor. And I think HIMSS is that pure play doing that. Of course, you have Amazon also launching its prescription service and working really hard on that. I'm sure Amazon will have a little bit of a share. But one of the key theses behind HIMSS, one of the reasons why I believe HIMSS is able to grow so much faster than everybody else is because it doesn't take insurance. It doesn't accept insurance. And because of that, it doesn't have all of the hard work on the back end, the reimbursement work on the back end. It doesn't have to deal with that. It doesn't have to follow XYZ rules that insurers have in place in order to deny reimbursement. And it can just focus on satisfying the customer. So this is a very customer-centric business. It's very odd, if you ask me, that Amazon didn't go that route. If you look at the Amazon's program, Amazon's prescription program, they still sell you, it's zero when you enter your insurance, and they hope to upcharge your insurance company. That's kind of how Amazon does it, and how traditional health does it. HIMSS doesn't do that. HIMSS is entirely outside of insurance. And keep in mind, you can also use HSA, and that's also pretty successful. So anyways, this is not a fundamental video on HIMSS. This is just talking about the recent run. I think the stock is still cheap. Of course, I make so many videos on HIMSS. You bet it was better 2 months ago, wasn't it? It was better 2 months ago. Let's talk briefly about the catalyst, the upcoming catalyst. So they closed the Eucalyptus acquisition because they closed. So, and Eucalyptus, of course, is operating across 3 different continents. It's in Japan, it's in Germany, it's in Australia. So Eucalyptus is a big acquisition. 250 million of ARR at least are going to be added this year. And it could actually be more, because Eucalyptus, the firm they acquired, is actually growing faster than that. So The point I'm trying to make really quick is that they need to update the guidance. They now need to update the long-term guidance and the 2026 guidance, because this stock has been the king of sandbag. And why would you blame them to be the king of sandbag? Because this stock has had zero respect. Ever since the stock started trading, it got zero respect from the market. So they are sandbagging. I expect them to update now the guidance, and that's going to be the next catalyst. And I also expect them to update it, but it will still be sandbag. That's how I view HIMS. You can see this is a stock that is not shy in giving you long-term guidance. 2026, they estimate between 19 and 28% growth. That was before the eucalyptus acquisition. Eucalyptus acquisition now closed. So you're adding at least half the ARR of eucalyptus. So that means you're getting to, in my spreadsheet, I have it as 35% revenue growth over the next 12 months. Could be higher than that. Especially as GLP-1s appear to be picking up steam, and especially as they've had successful international initiatives. You may have seen the UK launching GLP-1s in the UK via HIMS. That seemed to have been a pretty successful launch. So in my view, we're still growing well into the 30%, perhaps even the 50%, perhaps even higher when we have the peptides. The peptides are not even included in any of this guidance. They don't have any formal peptide offering whatsoever. Think about when we add the peptides, when we had BPC 157. What's that going to do, right? You're going to have all of the gym people who are going to be going to see HIMS now for their injury and stuff. Anyways, this is pretty amazing. I like the 8%. It's good to see a few stocks coming back to their senses. This is definitely not... outside of AI is doing well, but outside of AI, a lot of stock also need to come back to their senses. HIMS is that company today, and we are celebrating. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.